Good afternoon, all our customers across Nigeria and outside Nigeria. I want to welcome you to our pre-retirement seminar titled Making the Best of Your Post-Work Life. My name is Kenneth Omogo. I'm the Zonal Manager South, Stanbic IBTC Pension Managers Limited. And I have with me today my co-presenters and facilitators here. I'm going to be introducing them before we start the presentation. So I'll start with introducing Tola Adewuyi. Tola is our Head Regional Operations, Stanbic IBTC Pensions Managers Limited. Please, Tola, you can wave to the audience. And yeah, okay. Then the next person I'm going to be introducing is Ibiemi Mezu. She is the Head Business Development, Stanbic IBTC Insurance Brokers Limited. Ibiemi, say hi to our audience.
Good afternoon, everyone.
Yeah, good afternoon. And the last person I'm going to be introducing to everyone today is Nike Bajomo. Nike Bajomo is the Executive Director of Business Development, Stanbic IBTC Pensions Managers Limited. Hi. Yeah, Nike, we couldn't hear you, please. Can you unmute?
Good afternoon, everyone.
Yes, good afternoon. Okay, from my own end, I want to thankfully welcome you all again to all our customers to our event. And without wasting so much time, we would just kick in and start with probably with the presentation after Nike has given her welcome address. So Nike will be setting the tone for this event with her welcome address, and then after that, we'll now talk about the schedule of the event and the objective of this event. Nike, over to you, please.
Thank you very much, Kenneth.
Yeah.
And good afternoon, everyone, once again. I would like to appreciate each and every one of you for making our time to be with us again this afternoon. If you recall, when we had the meeting about this time last week, we did say that this is our digital version of the pre-retirement seminar. And for some people who have attended or heard about it before, usually there was a big town hall event where we'll come to you physically and answer all of these questions and give you pointers to what we need to start thinking about, even as we think for retirement. Think about retirement. Like I said last week, for those of us who are just joining this session, maybe you missed a session last week. Some of you are not, ready for retirement. Some of us are under 50, but you're on this call. And that's because over the years, when we've done this pre-retirement seminar, by the time we're done, our clients are a bit upset with us. So you should have told me this 10 years ago. You should have told me this 15 years ago. So right now, our pre-retirement seminar is pretty much open to everybody that is working to say, you know what, you needed to start thinking about your retirement from the day you started your first job. However, if we do not start then, I guess the next best time is now as we look forward to it. And retirement is not something to dread, it's something to look forward to. And in looking forward to it, it means we have to plan well. So as the theme of this event goes, it talks about making the best of your post-work life retirement and how to access your pension benefits. That's the module we are going to be dealing with today. Last week, we talked about your health and how to take care of your health pre and post retirement, and especially in these COVID times, we have a specialist to also talk to us about how to take care of our health and the well-being of people around us. As we prepare for retirement. I believe you found all of that useful, and that some of the tips we're already beginning to make use of some of the tips that we got at that session. So today is all about retirement, how to access your benefits, different kinds of benefits that they are, and how you would access them, the documents that you require, and all what have you. So I would say that in line with our promise to ensure that our clients retire well, that is why we have brought this session, and we'll say that you should please sit back, relax. I believe we have our writing pads ready to take notes, There's a Q&A where you can ask your questions, and all your questions will be answered today by the experts that we have on the call. So once again, on behalf of the board, management of Stanbic IBTC Pension Managers, I'd like to welcome you again to the digital version of our pre-retirement seminar. Thank you very much for coming, and we trust that it will be a worthwhile experience. You're welcome. Thank you very much.
Thank you very much, Nike, for that wonderful welcome address to all our attendees. I would just quickly, like I mentioned, take us through the event outline that you can see on the screen. So I would talk about our objectives first, and then we, like Nike mentioned, we actually started this series of this webinar series last week, and those of you that attended probably saw the two facilitators that spoke to us about owning our health and well-being in active service and at retirement. So today we'll still continue with the objective of the whole webinar, which is to equip our participants to prepare for life after work while in active service, and also to provide information on how to assess your benefits, pension benefits at retirement, and also the documentation required, which is what we are going to be speaking about today. And then the last one is to deliver key insights on how to prepare for a healthy and wealthy life, which was what we dealt last week, like I mentioned. Okay, so what are the schedule of events? So let me take you back to what we did last week. So we dealt owning your health and well-being last week, Thursday, 16th July 2020, and feedback that we got from most of our attendees was very impressive. I mean, was very commendable. And then the focus of the day was on owning your health and well-being at retirement, in active service and at retirement. And then we also addressed the obvious changes in the health sector as it relates to COVID-19. And I'm sure most of the attendees that were available for those sessions took a lot of good learnings back home. So today, which is the day 2, we are going to be focusing on how to access your pension benefits. And this event is supposed to last for 45 minutes. So we started by 1 p.m. today, and hopefully we should end by give or take 1:45 or a bit, or maybe we might just add some few minutes to take care of the Q&A. Focus of the day today will be on when and how to access your retirement benefits. And my colleagues that I introduced here today would do justice to this presentation. We'll also look at understanding the features of program withdrawal and annuity, and then we'll talk about benefit withdrawal checklist and documentation. And I would want you all to sit tight and watch Tola handle this. Then on Tuesday next week, 28 July 2020, we are going to be having our grand finale, which is on preparing for life after work. I want you all to just be ready for this event, because it's going to be, you're going to be learning a lot, and there will be a lot of key insights that will be shared on that day. And then the focus of the day, that's Tuesday, 28 July 2020, will be on financial planning towards retirement. We'll be talking about benefits of saving with voluntary contribution, and also leaving a legacy by putting a plan in place. So thank you very much for coming. And while the presentation is going on, we would want you to key in questions, your questions, feedback. We want to get your questions, we want to get as much questions that we can get from you, comments, feedback on even how to improve on the seminar. And you can also share your key take home from this seminar. So without further delay, I'll be calling on the first presenter today, Adetola Adewoyi, to handle accessing your retirement benefits. Thank you very much. Over to you, Tola.
All right, thank you very much, Kenneth. Good afternoon, everyone. Thanks for having me. It's an opportunity to have our clients and have this session to actually interact and provide information that are critical to our clients being able to retire well. To start with, every pension scheme has an ultimate objective, and that is to ensure that all the contributors in the scheme are able to access their benefits as and when due. And that's why in Stanbic IBTC, what we always say is that we want our clients to retire well. And it's in so doing and in a bid to achieve that, that is why we are also having this session. So this session is to equip our clients with the information that they need to be able to access their retirement benefits. Now, going into the presentation, the Pension Reform Act 2014, as amended, made provision for eligibility of account holders, grounds on which they can access their retirement benefits. The Pension Reform Act, as amended, provides for contributors being able to access their retirement benefits upon retirement or attainment of 50 years of age, whichever of the two comes later. So basically, if an account holder is 50 years already and still in active employment, it is expected that such contributor would wait till retirement before they are able to access their retirement benefits. If on the other side, if the contributor has retired from employment and has not attained the age 50, it is expected that the contributor will wait till the age of 50 before accessing the retirement benefits. And the Act also made provision for people that are retiring under terms and conditions that qualifies them to access their retirement benefits. Now, when this eligibility is in place and we can confirm that our client is eligible by meeting this condition, there are two major options that retirees today can pick from, and that is what we call lump sum and program withdrawal and lump sum and annuity. Today, any operator within the industry is required to make sure retirees have the information that they need to be able to make that decision. And I must emphasize that the decision as to which of those two options a retiree wants is exclusively that of the retiree. No PFA can decide for the retiree to go for program withdrawal or to go for annuity. The expectation is that the requirement under those two plans are provided to retirees, and by so doing, they are able to make an informed decision with respect to the option that they prefer. There is a third withdrawal mode that we call en bloc. En bloc is conditional, it is not by choice. And what do I mean by that? For an account holder that has an RSA balance of 550,000 and below, such account holder will not be able to access lump sum program withdrawal or annuity. The Act requires that such account holder is paid the amount in the RSA retirement savings account in lump sum. So such balance will be paid to the retiree as en bloc, and that's why that one is not in the same class as program withdrawal and annuity. It is by condition, and it's applicable to account holders who have 550,000 and below as their RSA balance. All right, like I mentioned, the choice between going for program withdrawal or annuity is the exclusive preserve of a retiree. And it's important for us to also project what are the features of program withdrawal, what are the features of annuity, and these are the things that also go into the consideration to help retiree decide which withdrawal mode they would like to go for. So I'll start by talking about program withdrawal. Program withdrawal is expected to pay pensions, monthly pension to retirees based on lifespan, and the monthly pension that is derivable from a program withdrawal plan is expected to be minimum, at the minimum, pay the retiree 50% of their final salary. What this means is that if I'm collecting 100,000 prior to my retirement on a monthly basis, it is expected that my monthly pension, when it is computed, should be able to pay me 50% of that amount. So I should be able to get 50,000 naira on a monthly basis as my pension. Also, under the program withdrawal plan, if a retiree passes on at any point in time, the named beneficiaries of such retirees can apply to the PFA to assess for the death benefit, which is a payout of the RSA balance standing in the client's account. Also, a retiree that is on program withdrawal can move from program withdrawal to annuity at any point in time. That decision can be taken, whether it is as the retiree is applying or when someone been on the payroll and at some point wants to change from a month on all the payouts regarding program withdrawal, enable the client to a quarterly statement, and that statement will show the client the contributions accrued in the account, the growth, the monthly pension payout. The client will be able to see that on the statement. And also, subject to growth, a retiree on program can also enjoy what we call monthly pension enhancement. This was an initiative that the regulator started in 2017. We've had the first phase in 2017 for some retirees. The second phase took place this year. It started February this year of monthly pension enhancement. And what this does is, subject to the growth observed in the RSA account, a retiree that is previously earning 50,000 naira as monthly pension based on computation could then be reviewed upward and say the retiree moved to collect 60,000 naira on a monthly basis. So that is the essence of the enhancement. And that's a very good initiative, I believe, because the same amount that 50,000 can acquire in the last 5 years, 10 years is not the same today. So it's also important that there's a form of raise, even if as the economy changes. So I think that's a good initiative from the regulator, and it has come to stay. With respect to annuity, annuity too is expected to pay pension till death for an annuitant, and the retiree's annuity, like the program withdrawal, is also meant to give a minimum of 50% of the final salary, just as I explained earlier. Under annuity, payout is guaranteed for 10 years, for a period of 10 years. And what this means is, if a contributor, a retiree that is under annuity, passes on before 10 years, the legal beneficiaries would be able to access the balance standing to the credit of that retiree for the remaining period of that 10-year period, for that 10 years. Now, if a retiree on annuity passes after the guaranteed period of 10 years, there is no claim or obligation on the insurance by beneficiaries. So there's no payout to beneficiaries of such a deceased retiree. Also, the investment risk with annuity is borne by the insurance company. What this means is that the insurance company's obligation to the retiree is the monthly payout that has been agreed. How the insurance company invests the money, whether they make loss or profit from that investment, doesn't have any bearing on the retiree. And that's why we say that investment risk is borne by the insurance company. The monthly pension enhancement that I also mentioned that the regulator initiated is exclusively for program withdrawal. That is not applicable to annuity. And finally, for annuity, the insurance companies to render returns to the National Commission through their regulator, that is National Insurance Commission. They do render their own returns as well to PENCOM. Now, there are other withdrawal modes that we believe we should also mention during this forum. And we have what we call missing persons, which is provided for in the Act. And this is a situation where maybe a contributor has been declared missing and the relatives and family have no idea of where the person is or whether the person has passed or not. The Act provides for the National Pension Commission to constitute a board of inquiry. The board of inquiry will look into the evidences and submissions made by the beneficiaries and then come to a conclusion based on their investigation whether to consider the retiree as deceased or not. Where they are able to come to that conclusion that the retiree is deceased, the feedback will be given to the PFA, who also relay the same information to the beneficiaries, and that would enable them to progress application for death benefit. The other one is deceased benefit, which is basically we are aware that the client has passed and the legally recognized beneficiaries have approved the PFA with instruments of law recognizing them as the executors to the estate of the deceased. Based on that, they would also be able to progress the application for deceased benefits. Now, for clients who have retired, so we also have today clients who have retired, but because they are not tired, they are also still able to gain another employment with another institution after retirement and after they started even drawing their monthly pension. Also, for such clients, for such retirees, they are able to, their entitlement from their new employment comes in by default as a voluntary contribution in their RSA. So all the pension that is deducted from their emolument by their employer in such situation, such pensions, when they are remitted, they are brought into the RSA as voluntary contributions. And such voluntary contributions can be assessed by the retiree 100% once they exit that employment. I must also say that the contributions and accrued interest on such voluntary contributions are subject to tax. They are subject to personal income tax if they have not stayed in the RSA account for up to 5 years. But where the voluntary contributions have stayed in the account for 5 years, there will be no tax implication. Thank you. Next slide, please. Thank you. Now, with respect to assessing benefits, there are documentations that are required and information that the prospective retiree needs to provide. And one of such is what we call data recapture. I must emphasize that the data recapture came into being last year, around July last year, yes. And the essence of the data recapture is based on the enhanced contributor registration system that the regulator put in place. And this was to ensure that we have harmonized data across the industry and ensure that data integrity is preserved for our clients. And that exercise applies to both existing customers and new customers that will be registered by PFAs. So for all your existing customers, our ask is that right now you need to do your data recapture because it's a prerequisite even to assess benefits. And we don't want clients to wait till when they need their money before they start that exercise. It's ongoing across our locations today, and it can be done on our website. So that's for the data recapture. Also, application form has to be filled by the client, indicating the withdrawal mode and benefit being applied for. The passport photograph, birth certificate confirming the age consistency, retirement letter would also be required. We also require confirmation letter for private sector employees. So this confirmation letter will be redone by the PFA. So we are the one that will do the confirmation letter to the employer to confirm that the accrued benefits due to the client has been duly remitted. The client is expected to provide account details, of course, for payment. Means of identification would also be required. NIN slip is accepted. Driver's license is accepted. International passport is accepted. Program withdrawal agreement would be executed at the point of applying for those going for that option. For anyone going for annuity, the annuity agreement would have to be executed as well with the insurance company. Retiree indemnity form is also applicable only to federal employees who are retiring voluntarily from their employment. We also require pay slip within the last, any pay slip within the last 3 months before retirement. That's required for us to determine the final salary. Don't forget I mentioned that the pension should be a minimum of 50% of the final salary. So that's required to confirm that. Also, the acceptance letter would be executed by the retiree, confirming the monthly pension that has been computed and the lump sum. Also, for public sector employees, the letter of employment or first appointment would be required for people in that category. Original bond certificate and clearance. So this is applicable to employees that are under state establishments. It's not everyone. This is strictly for employees under state establishments. And an example is Lagos State. For Lagos State, the government issues bond certificates to eligible retirees as well as clearance, and that is used in processing benefits. For the VC application, basically clients would need to fill the form, provide means of identification, and give consent for tax deduction, just as explained earlier. And then for retirees in this category, the exit letter from the employment that was gained after retirement would also be required, because we need to confirm that exit to enable the retiree access 100% balance. Next slide, please. All right, so all this that I've said, and then with what we have on this slide is just to emphasize to us, because the beauty of the scheme is for any contributor to retire today, approach us as the PFA, and we are able to conclude that in no distant time at all. And to achieve this, it's a collective effort. We have to do our bit. Our contributors, our clients also have to do their bit. So this is just for us emphasizing that there is a need for our clients to update their information with the PFA. Data recapture is one way to achieve that as we speak. Once the data recapture is done, so that the PFA can have the updated record for the clients on the system. Also, for our clients who ask that relevant information that they need from their employers are obtained ahead of time. Document like pay slips, we've seen instances on several occasions rather, where clients is at the point that they want to apply, that they realize that they don't have that pay slip, and they then need to go back to their employer that they've left maybe a year or two ago to request for the pay slip. So before leaving employment, please make sure that those documents are obtained from the employer. Pay slip, retirement letter, those things are obtained. It helps to prepare ahead. Also, for states and for employees that that reconciliations are required to be done, particularly for public sector employees that needs to go for verification exercise. This is done on an annual basis, and it's important that our clients take this opportunity to do the verification on time, so that their benefits can be assessed, their accounts can be reconciled, and then benefits assessed promptly. Most times, some clients would tell us that they've missed the verification exercise, and it's done once a year. So oftentimes, it creates a delay in the reconciliation process, and that creates further negative experience. So we want our clients that are in the public sector to keep abreast of the verification exercise. This is announced in national dailies and broadcast to all employers within that establishment to make sure that everyone is informed of when it's taking place and can go for the verification exercise. And also for employers that will still require some form of reconciliation and clearance, whether public or private, it's important that as employees, we also confirm with our employers that we have done all that is required to get the needed clearance. Thank you. Next slide, please. All right, so just to wrap it up, I know we'll be taking more questions in the course of the session. These are our channels. We can be reached via our website. Like I mentioned, the data recapture can actually be done on the website, and it's very, very seamless. So I'll encourage every one of us that have not done it to make use of that channel. All our other channels are available for our clients' convenience. The 24 hours multilingual contact center is available. We have email, pension solution email dedicated box, handling customer requests. We are present on social media. We can be reached via live chats on our websites. We have our super app as well, and I want to believe that most of our clients have started enjoying the new experience that our super app has provided. It's end-to-end and fabulous. So we encourage you to explore all those channels. In reaching out to us, we are here for our clients, and we want to ensure that our clients are able to retire well. Thank you. Kenneth, thanks. Over to you. You are muted, Kenneth.
Oh, my sincere apologies. Okay, thank you very much, Tola. Thank you so much for this wonderful presentation. For those of us that joined during Tola's presentation, Tola took us through the topic through the presentation on how to assess your retirement benefits. And then I'm going to be calling on the next presenter, the next facilitator here. I introduced that earlier. Her name is Ibiyemi Mezu. Ibiyemi is the head of business development, Stanbic IBTC Insurance Brokers Limited. And Ibiyemi will be taking us through the presentation on retirement life annuity option. Ibiyemi, over to you. You can go ahead now. Thank you.
Thank you very much, everyone. Good afternoon once again. Thank you for the introduction, Kenneth. Without wasting too much time, I'm just going to move on to the next slide. My presentation will be dwelling on the life annuity option. Like Tola mentioned earlier, you do have two options at the point of retirement. You can opt for program withdrawal and you can opt for retirement annuity. And like he also said, this session is really to provide the right guide to everyone. It's not when you have retired that you should be finding out about these options. You should know what your options are and you should plan ahead. So before I move in to talk a lot more about retirement life annuity, I just want to do a quick introduction to the organization that I work with. I work with Stanbic IBTC Insurance Brokers. So we're not part of the Stanbic IBTC Pension Management Organization. We're a standalone entity. Can you move on to the next slide for me, please, Kenneth? So as you all know, Stanbic IBTC is an end-to-end financial service provider. This means that regardless of the options, whether you're working or at retirement, there's a professional and there's an expert within the group that can provide guidance and also lead you throughout the journey. So in Stanbic IBTC Insurance Brokers, our main role is risk assessment. We help organizations and individuals to understand the risk that they carry. We also help with the negotiation of premiums and just making sure that the risk is placed with the right insurance company. And where there's a claim, we also work with the client to make sure that the claims are settled promptly and equitably. So our role really is advisory, and we provide that guidance even for people that are retiring under the Pension Reform Act. We ensure that you know all of the options that are available, and we also help in the engagement of the different insurance companies that you may want to go with, and just make that process really seamless and easy for everyone. So that's our role. And just in terms of what we do and the benefits of going through insurance brokers, Kenneth, can you move on to the next slide, please? So our role is not at an additional cost to you. The services that we offer are at no additional cost. You will not have to pay for services that we render. We do earn commissions directly from the insurance company. So regardless of who you go with, our fees are statutory and they're regulatory. So it makes us really unbiased, and it helps to provide an objective view at every given point in time to the customer. The solutions that we also provide are customer centric. You know, they're specific to the client. We try to understand the risk and make sure that whatever insurance solution you opt for, that risk is adequately covered. And should you have a claim, you know who to talk to. Now, in the case of annuity, the question would be, what sort of claim can you have? And my answer would be death. You know, so what happens to you in the case of death? What happens to your beneficiaries in the case of death? What do your beneficiaries need to know, and what should they be concerned with should that happen? So these are part of the services that we offer. And we also work with reputable underwriting company. Pensions is supposed to be for life. You don't want to sign off with an insurance company that will not be around in the next 5-10 years. So part of the things that we do is to ensure that we work with reputable insurance companies, and regardless of who you opt for, you know, you can go to bed knowing that your pensions will be paid as and when due. Next slide, please. I will go on quickly to explain what annuity is and the key features of annuity. So annuity is a retirement option, like my colleague has said, and it offers a fixed sum to the retiree throughout their lifetime. So immediately you retire, the insurance company is expected to keep paying you your pensions, and it's a lifetime contract. That contract is between the retiree and the insurance company. It also means that at the point of retirement, your funds are transferred from your PFA to your chosen insurance company, and the insurance company will be responsible for paying you your pension for life. Now, the retirement annuity plan is approved under the Pension Reform Act. It's an option that you're able to go on or opt for, and it is regulated by NICOM. Insurance companies typically are regulated by NICOM. However, because everything pensions in Nigeria is supervised and regulated by PENCOM, we find that even with the retirement annuity, PENCOM also has a say as to how the funds are invested and what the insurance companies do with the funds, because at the end of the day, it's important to ensure security and safety for everyone. So in terms of the investments that the insurance companies make, there's a guideline that has been put together by both PENCOM and NICOM just to safeguard the funds. The funds are also placed with pension fund custodians, very similar to what you have with the PFAs. And the idea is really to prevent any commingling. The insurance companies don't have access to the funds and they cannot do whatever they want with it. That money is set aside with the custodian so that the investment instructions and guidelines are followed at every given point in time. Now, there are different types of annuity products. Can I please move on to the next slide? There are three main types of annuity products if you opt for retirement annuity. The first one is the level income, and this is perhaps the most common type of retirement annuity that a lot of people are conversant with. It's a fixed payment for life, and the option it actually pays the highest at the point of retirement, because whatever you sign off for with the retirement with the insurance company is what you're paid for life. So they continue to pay you that amount on a monthly basis or on a quarterly basis or even on an annual basis, depending on your preference. And there's a guaranteed period of 10 years. Now, the not so common option is another not so common option is spousal option. And what this spousal option does is to allow you add on your wife or your husband to your plan. A lot of people at retirement are not just worried about themselves, but you're also worried about your spouse. So this plan allows you to add your spouse to the plan. And the idea is that you would start collecting pensions, and should you pass away, your spouse would automatically start collecting a portion of your pension. It's usually either 50% or 75% or 100%, as you may have indicated. Now, the impact is that what you would get at the point of signing off will be way lower, because it means that your retirement plan is actually covering 2 lives as against 1 life under the level income option. Now, the third one is what we call the increasing income. And what this does basically is it allows you to increase what you get on a monthly basis, or sorry, on an annual basis. So you start off on an amount and you can decide to increase that amount by 5% or 7.5% on an annual basis. And this standard increase is on a compounding basis, so that it can make room for inflation or increase in pricing and all of that. So those are the 3 main options you have when you're opting for retirement annuity. Now, what are the key features of annuity? I know Tola has spent some time explaining and trying to compare both, so I'll just stick to the key features of annuity. So first and foremost, it is offered by insurance companies. It's not going to be paid by your PFA. Your funds actually move from your PFA to an insurance company of your choice. And like I said earlier, the annuity fund is supervised by PENCOM, but actually regulated by NICOM. Now, unlike what you would find with program withdrawal, where the PFA has a template that they use to determine what your monthly payout and what your lump sum would be. As such, if you go from one PFA to the other, you find that it's pretty much the same thing that everybody is offering you. With annuity, it would vary from one insurance company to the other. So it's important that you also check what your options are and how much you can get from different insurance companies. Now, the payment is for a lifetime. It means that until the retiree passes on, the insurance company would continue to pay. And then on the bequest motive, we get a lot of questions around this guaranteed period. People say, oh, does this mean that I'm only guaranteed to collect pensions for 10 years? What happens if I outlive that period of time? Will I continue to collect pensions? And the answer is yes. You would continue to collect pensions so long as you're alive. The 10-year guaranteed period really is for your beneficiary. And this simply means that should the retiree pass on within 10 years, the beneficiary is able to get the balance of what the insurance company would have paid within that 10 years. However, if the retiree should pass on after that 10 years, it is expected that the beneficiary will not get anything. Next slide, please. Now, in terms of safety, and I think safety is important for everyone. You want to be able to go to sleep knowing that your retirement funds, that you may have, gathered over a period of 30, 35 years. You want to be sure that that money is safe. So what the National Pension Commission, PENCOM, has done is to ensure that even insurance companies place their funds with licensed pension fund custodians. And as you all know, pension fund custodians are also regulated by PENCOM, just to build in the right safety mechanisms into all pension payout. The payout can also be monthly, it can be quarterly, or it can be annual. It's totally up to you. In terms of return on investment, unlike what you would get with your program withdrawal, where you see returns and you have access to your statement, with annuity, you do not have that option. Once you sign off with an insurance company, there's a provisional agreement that details if you have opted for an increasing option, then you would get an increase every year. But if you have opted for a level income, whatever you have in that contract is what is paid to you. So whether the insurance company has very high returns or no return, it really has nothing to do with you going forward. They bear the risk. You are just guaranteed payment of your pensions for life. Now, once you have moved to annuity, you cannot move back to program withdrawal. However, you can move from program withdrawal to annuity if you desire. It doesn't have to be at the point of retirement when you're processing your pension. You can actually move to annuity even after retirement. You have that option. So in terms of next step, what do you do? At the point of retirement, should you decide to opt for annuity? Now, if you decide to opt for annuity, you will still need to engage SIPML. You would obtain the necessary checklist and all of the documents that you require in order for your pensions to be processed. Now, for us, what we do is to provide you with multiple quotes. I said earlier that the insurance companies will typically offer different rates and different pension payout. So what we do is to help customers to do all that shopping around, and we provide you with multiple quotes so you can decide out of all of those insurance companies who you would rather go with. Now, once you have decided on the insurance company you want to go with, you will complete a proposal form, provide one passport photograph. You'd also provide passport photograph for your beneficiaries because this is needed, God forbid, in the case of death. You want that money to be paid out to your beneficiaries as and when due. We would also need a valid means of identification, your acceptance or retirement letter from your employer, and a copy of your checkbook or your BVN, just to be sure that the money is paid into the right account. And for us, once the provisional agreement has been provided by the insurance company, we send this to you and just handhold you throughout that process to make sure that it's seamless and it's easy and you're not having to move from one office to the other before you can process your retirement annuity. So like I said at the beginning, whether you want program withdrawal or you decide to opt for retirement annuity, there's somebody within the group that can provide you with that support and ensure that your retirement is indeed seamless. So thank you very much, everyone, and I'm happy to take questions.
Thank you very much, BME and Tola, for these wonderful presentations. Right now, we are going to be answering some of the questions pouring in here. There are a lot of questions on the Q&A segment, and then we'll just take a little time to answer a few of those questions. And if you notice, we have our guys at the background, responding to some of those questions. Tola, the first question here goes to you, and is from Mr. Olutayo. He said, a program withdrawal is a method by which the employee collects his retirement benefit in periodic sums, sum spread, throughout the length of an estimated lifespan. Now, his question is, what is the estimated lifespan? Who determines the length of collection? What is the periodic collection, monthly or quarterly? Thank you, Tola. Over to you.
All right, that's a very good question. Thank you, Kenneth, and thank you, Mr. Tayo. So with respect to that question, yes, pensions on the program withdrawal can be assessed either monthly or quarterly. So a retiree can decide, so I want my pension to be paid to me on a monthly basis, or I want it to be paid to me on a quarterly basis. Also, with respect to the lifespan, so the program withdrawal computation template, as advised by the regulator. So the Act gives the regulator power to come up with template and review it from time to time. So the current template in place has a mortality table that recognizes 82 years for male and 84 years for female. Thank you. Yeah.
All right. Thank you very much, Tola. Still holding on there, I have two questions. I'm going to lob two questions to you. Someone here is asking, he said, I am 54 years old and I have more than 12 million in my RSA. May I know how to access it? I think you have explained that in your presentation, and that has been dealt. Then he actually, the next question is, if a contributor dies, that's the main question. If a contributor dies, what percentage of the contribution gets to the next of kin? Tola, over to you.
All right, thank you. And I think, so for, if a contributor dies today, the entire balance in the RSA goes to the legally recognized beneficiaries. Of course, the beneficiaries will have to provide the required documentation, letter of administration, or a will admitted to a probate, and their national identification number, registration, death certificates. Those are the documents that will be collected from the beneficiaries. But to answer the question straight to what was asked, it is 100%. So it's not a percentage of what is in the account. The entire balance standing in that account, as at when the deceased passed, the retiree passed, will be passed on to the beneficiaries. It's not a percentage of the balance. It's an entire balance.
All right. Thank you, Tola. Tola, again, still on you. Before I move to DME, someone is asking here. The person says that I'm not a Nigerian. I'm not a permanent resident. Then he now said, what happens when I leave the company I work for and return to my home country? So we are, is referring to benefits for a foreigner that is not in Nigeria. How would that be dealt? Thank you, Tola. Over to you.
All right, thank you. For foreigners, foreigners can access 100% of their RSA balance. That is, withdraw the 100% of their RSA balance. Once there is evidence that they are provided showing that they are relocating to their home country permanently. So that entitles them to access the entire balance in their account. But such evidence has to be provided. The employer will confirm that the foreigner has exited and is going back to his home country, same also from the embassy. Thank you.
Tola, again, probably the last question to you, Tola. Now, one of our clients here is asking, in a time like this, can we borrow some money from our retirement savings account? This is critical now, taking cognizance of COVID-19. So can you respond to that, Tola? Thank you.
Sorry, can you take the question again? I didn't get that.
Oh, okay, Tola. Sorry about that. Maybe some technology issues. So I'll take the question again. He said, in time like this, can we borrow some money from our retirement savings account? This is critical now, taking cognizance of COVID-19. Did you get the question?
Clearly.
All right, thank you.
All right, thank you. And okay, let me just start by saying I sympathize with the situation that the pandemic has actually created for every one of us. But then again, the retirement savings account is a social security that is put in place to cater to account holders' welfare after retiring. And it is so pension is not available for borrowing, whether you want to take some amount out as a loan or you want to use it even to borrow money from a bank or from a financial institution. No, that is not allowed with respect to your pension account. Your pension account is safeguarded to take care of your welfare upon retirement. So it cannot be taken as a loan or be used to borrow a loan from a financial institution.
Thank you very much, Tola. Just to add to that bit, I know that in Stanbic IBTC Bank, it's not mainly collateral, but once you have a pension account and then you have a certain amount of money, 10 million upwards, thereabout, you should be able to access some loan, but it's not termed as collateral. Is probably in a way to profile you as a customer who has been able to build up that money for a while, and then to check the bank can also do back end check as well, credit check, to see if you are eligible to such product where you can access money, access loan from Stanbic IBTC. Over to you right now, EBME. There's a question here. The person is asking for which option. He said annuity or program withdrawal. Which option should I take? I mean, maybe the person needs some clarity, so maybe you might need to tackle that question. Thank you.
Okay, thank you, Kenneth. The truth is both program withdrawal and annuity are good products. They both have their merits and they both have a bit of a downside. My advice is usually to review your status, where you are currently, how old are your beneficiaries? Do you have young kids? Because with program withdrawal, if that happens, your balance is transferable to your beneficiary. Whereas with annuity, that option is only for the first 10 years. However, because annuity pays out a lot more than program withdrawal, we do have people that say, oh, my beneficiaries or my kids are old enough and I really don't need to cater for them as much. If I pass on within the first 10 years, I'm happy for them to take whatever it is that is left from the expected payout. So annuity pays out a lot more at the point of retirement, and as such, some people prefer to take that payout as against staying on program withdrawal, knowing that if anything happens to you, your beneficiaries can get the balance of your RSA. So it's really a personal choice depending on where you are and what your needs are at the point of retirement. The amount that is being paid to you, is it sufficient to meet your needs? If it's not, then you obviously want to consider a product that pays out a lot more. So it really depends. But whatever your option is, whether program withdrawal or annuity, you can be sure that at the point when you retire, somebody would handhold you and provide the necessary guidance. Thank you.
All right, thank you, BIB. I'm still staying on you right there. So there's a question here: which model ensures continuous pension till death, even at 100 years of age? EBME, the question is for you.
So annuity pays for life, and what that means is whether you live till 100 or 200 years, it doesn't matter. The insurance company continues to pay you. So annuity does pay you until you pass on. You're guaranteed payment with annuity option.
All right, thank you, BME. All right, there's another question here. Maybe I'll just switch to Tola. Okay. And we might probably be ending with this question. So yeah. So the question goes like this, Tola. Will monthly pension for the two categories of pensioner, annuity and program withdrawal, last for life? I know you mentioned it, but probably to provide clarity on that. Thank you.
Yeah, thank you, Ken. So yes, it's expected that the retiree is able to collect the monthly pension for life. But like I mentioned earlier, the life expectancy is also the bottom line. So when the computation is done, it is expected that for a male, for a minimum of up until the age of 82, the monthly pension should be able to sustain the payout. Female up until the age of 84, the monthly pension should be able to sustain the payout. But then again, it's a function of the RSA balance. So we have clients, of course, that their pay will sustain beyond that period, but that is the minimum expectation.
All right, thank you, Tola. And then EBME, from insurance perspective, how would you tackle that question?
Ken, can you repeat the question, please?
Okay, he said, will monthly pension for the two categories of pensioners, annuity and program withdrawal, last for life?
Okay, it's very similar to the last question. With annuity, the monthly pension is for life. You would continue to get that amount until death. So yes, retirement annuity offers that confidence, that assurance rather, that pensions will continue to be paid for life.
All right, thank you very much. While going through the Q&A, we noticed that there are a lot of questions around how do we send the slides. I mean, are they participants that didn't attend last week's session, would they be able to get the slide? And then the response to that question will be that we would be able to put the slides in probably like in an abridged summary, like abridged version summary of what we have discussed, and sent to our attendees, as the case may be. So we will check out for the report of the attendees and forward the slides. So just to wrap up the presentation, I'll go back to the first slide of the day in terms of the schedule of events, and also speak to us on what to prepare. So like I started the presentation by mentioning that on the first day that this event is all about a series which we have tranched in 3 different topics. And then if you recall, if you joined us last week, we had a session on owning your health and well-being, which was dealt by 2 of our facilitators. And then today, Tola and EBME, my co-presenters, facilitators today, handled the topic on how to assess your pension benefits. And we focused on 3 major items, which is when and how to assess your pension retirement benefits, understanding the features of program withdrawal and annuity, benefits withdrawal checklist, and documentation, which Tola and EBME dealt. And I would want to probably end today by informing our audience, our attendees, that there will be a grand finale on Tuesday, 28 July 2020. And then the topic for that day is preparing for life after work. Focus of the event, focus of that day will be on financial planning towards retirement, benefits of saving with voluntary contribution, and leaving a legacy by putting a plan in place. So the presentation on Tuesday will be centered around how you can build your finances towards an enjoyable and a good retirement. I will want to end the day again by saying that those questions at the Q&A segment, please go and check them. We have our back end support staff responding to those questions. Because of the limited time that we have today, we weren't able to speak to it on the live event. We would still go back to respond to those questions, and we'll leave the live event on for probably another 5 to 10 minutes for you to check responses to your question. I would want to thank every one of our clients, our attendees all around Nigeria and across the world for honoring this our special event today and making our time to be here present to learn and take away this presentation, to take key insights from these presentations from Tola and EBME. And remember, Tuesday, we are waiting to deliver good presentations on preparing for life after work. Thank you very much for joining us today. On behalf of management of Stanbic IBTC Pension, I want to say thank you. See you on Tuesday, 28 July. Thank you, 1 p.m. to 1:45 p.m. Thank you very much.